Hey guys, welcome to the Hoan Zone where we help you multiply the assets that you own. Have you noticed all of the people who have been starting businesses? You got your person who's joining the latest MLM, or they became a contractor overnight, or they became an expert in cryptocurrency, credit repair, and stock options. Anyway, I love all of it. I love all of these businesses popping up because they help you maximize your tax benefits. You get to write off so much stuff because you are in business. So in this video, I'm going to be going over all of that. But before we get into any of that, please like, subscribe, and hit the bell icon because I'm going to be releasing a new video every Monday and Wednesday on the Hoan Zone so that you can learn how to build a business from your phone. I personally have 4 different businesses. I am an investor. I have a real estate education program. I also am a real estate loan provider, and I do life insurance policies. So I have a lot of different businesses that generate a lot of income and taxable liabilities, but I also have a lot of write-offs, and I've been able to write off hundreds of thousands of dollars, putting tens of thousands of dollars back in my pocket. Now, of course, as a disclaimer, I am not a CPA, I am not an attorney, I am not an accountant, I am just some guy on YouTube that you like to listen to because I help you build more businesses. But before you take any steps that I mentioned within this video, please talk to your tax professional and get good advice. But because you're watching this video, you're going to be able to have a good conversation to know whether that advice you get is good or not. And be sure to check out my other video all about how to write off more on your taxes. Okay, with all of that out of the way, let's get into the video. So the main premise that I want to go over with you guys is this concept of above and below the line. So there is a line where your expenses go. So is your expense above the line or below the line? If your expense is above the line, that means you get to pay for that expense with before tax dollars. And if it's after the line or below the line, you get to pay for it with after tax dollars. So as an example, if I were to buy some food for myself personally, that is an expense below the line. It is not a business expense, so it's below the line. I have to pay taxes on my money, and then I buy the food. But if the food that I buy is for business use, then it is above the line, and I use my before tax dollars to pay for the food. So all of a sudden, my dollar has more purchasing power. How do you get as many expenses as possible above that line? Well, let's talk about what expenses those might be. You got your food, you got your auto, you got your office supplies, you got your utility bills, you got your home, you have your clothing, you have all of these different things. So how do you get it above the line? You use it for business, of course. And so if you're running these side businesses and they require you to spend some money on these things to run your business, then it is a legitimate expense. And the government allows you to write off different items if they're a legitimate expense. So as long as you're using these things for business, then voila, you got your write-off. So if you're traveling and you're going to go see a rental property that you own in another state, then that's a write-off. If you're going to a seminar to learn more so that your business can thrive, that's a write-off. So that flight, that food, that car rental, all of that stuff, those are all write-offs. And so that's all above the line. If you were just traveling to, say, Hawaii and you have no business going on over there, well, then that's going to be a below the line expense. So your job, just get things above the line. Now, most people think you need an LLC to do all of this stuff. You don't. Now, I recommend it, but you don't. LLC doesn't provide you tax benefits. It provides you asset protection. It provides you legal protection. LLC stands for Limited Liability Company. Limited liability, the first two, it's all about your asset protection there. So if you wanted to maximize your tax write-offs, you don't have to have an LLC, but if you have active income and you make a certain amount, then having an LLC taxed as an S Corp can save you on taxes. Now, this is going to get a little more detailed than most people understand or have ever heard about, but an LLC taxed as an S Corp is important once you start making over, say, $40,000 in net profit, because what you're going to have to do is, as an S Corp, pay an employee to do the job. So what's going to happen is when you have a company and you're paying, or I'm sorry, you're making money, and then you're going to be paying out after expenses your profits. How do you take those profits? If you don't do the S Corp election, then you're going to be paying what's called FICA tax on the whole net profit. But what an S Corp allows you to do is separate the distribution to yourself as the owner and the distribution as an employee. So you would become your own employee in your own company, and you would only have to worry about FICA tax on your employee salary that you're paying yourself from your company. When I tell people about that strategy and I say, hey, you have to pay yourself a wage as an employee, they say, well, can I just pay myself zero? And the answer is no. The IRS frowns upon that. They say that you are supposed to pay the employee a fair wage to do the job. So what is a fair wage? Well, that's a conversation for you and your tax professional to determine. But again, if you pay your employee that fair wage, you only have to pay that FICA on that salary. And then the distribution to you as the owner is FICA free. Now, once you have your LLC, you're being taxed as an S Corp, you have your employee status and everything set up. The other neat thing that you get to do is you get to set up a 401k for the employee, which is you, right? So you're going to be the employee. You're going to get a 401k where you get to put away $19,500 for the year of 2021. That changes every single year, and it's gone up since the last year. So for 2021, you get to put away $19,500. But here's the coolest part. As the employer, you get to do an employee match. Guess who got Employee of the Month this month? You, right? So your employer, which is you, will do an employee match towards that 401k contribution. And as the employer, you can put away $58,000 towards your employee's 401k, and the employee put away $19,500. We're talking about shoving away $77,500 all into a retirement account that is tax deferred. So if you had a really big year and you want to shove away that much money, then all of a sudden you're not having to pay taxes on that $77,500. And for my final tip, once you start putting away all of this money into your retirement account, what do you do with it? Well, if it's a self-directed retirement account, you can use that money to either lend, start a business, or invest in real estate. And now you get to create more tax-deferred growth in that retirement account by using that money as an investment tool. And so here's even more income that has no taxes. Now, I know I went through a whole bunch of different scenarios really quickly. I just wanted to expose you to all of these ideas so that you can have the conversation with your tax professional and see what he or she thinks about the strategies and what's best for you. And if you want to learn more, you can go to hoanzone.com and check out one of my courses. I may be throwing up a tax course soon, and so you can learn more ways to reduce your taxes. I would love some interaction, so below in the comments, please write down what business are you in and what tax strategies are you implementing in your own business. It is awesome seeing so many people create jobs, create businesses, and doing it by providing tremendous value to a lot of different people. People are realizing that there's not this job security that we once had. The pandemic really disrupted the whole entire world, and people are realizing that they have to depend on themselves. And what's happening is people are starting businesses and they're gaining experiences that they've never had before. All of a sudden, they have confidence through the roof, and they're creating massive amounts of income for themselves and their family. And this income is something that they can pass down to future generations. So it's not like the income that you get from work, where once you're done your job, that's it. You can't get your son or daughter that job. You can't say, hey, please hire them. You can ask, but that's about it. Whereas your business and the income that you're generating from this side business, you can show your son or daughter how to do it, or you can just give them that business. So I find it fantastic that so many people are creating these businesses. So I'd love to hear more about it. Put in the comment below, what is it that you do? Put your website. Let other people see what you're doing, and then this way your business can grow. I wanted to thank you today for watching this video. If you enjoyed the video, just hit the like button, and please share this video with somebody who may find it valuable. Again, we're all about creating more assets, and so people can have the life that they want with the income that they need. This channel is designed to help people just like you create that lifestyle. So again, subscribe, like, hit the bell icon, share it with your friends, and leave a comment below. Love to hear it from you. All right, see you in the next video. Bye.